All right, hello, welcome to this video for the High Velocity Market Master 2010 version. And in this video, I'm going to be covering crude oil futures, symbol CL. And in the charts that you're seeing here, this is a 6 range bar, very similar to an 89 tick. In case you're more interested in doing tick bars, that's pretty similar to the 6 range. So in this case, I'm going to be walking you through the 6 range. I'm going to start with actually yesterday from when I'm recording this, would be on the 17th of March. And if you recall, yesterday on Wednesday, the crude oil report comes out at 10:30, virtually every Wednesday at that time. There are some weeks it's different, depending upon holidays and things of that nature. But a great time to trade tends to be about starting at 10:32, about 2 minutes after, tends to be a really nice time to trade. So I'm going to go ahead and walk through the strategy from that time, and as well as do the most current session, which in this case is Thursday, March 18th. And we'll of course be using our power of quitting rules, basically trying to get to those 2 wins and positive and done, and we'll walk it through that way as well. I want to show you the calculator settings real quick so you can kind of get an idea of what I'm using here. Okay, so the keys here, all default settings. I am using the PL factor of 4. As you know, we use 4, 5, or 6. I'm using 4 because this market definitely makes some quick moves. It's probably our most sensitive setting, so I'm okay with that with this market. Everything else default until I get to my target is, which is our target 2. I'm using a setting of 3, which basically means 3 times the range. And in this case, the range bars are 6 cents. So that's going to go for 18 cents for target. That's $180 per successful trade. Obviously, it's a very sizable move, good for day trading. And I've got my little money management level at 2.5. If I do a re-entry, I'm using the same 2.5 and 3. And also my reentry X value is 1. That's all default. So really the key things that we talk about is the PL factor, in this case 4, and what target are you going to use. In this case I'm using 3. The other thing to look at is my early exit. I'm using 1.5. All that really means is I'm not really looking to get out all that quick on this one. If it starts to turn against me a little bit, I'm going to get out on the early exit, but not super fast. All right, so 1032, you can see we get a short entry because we have a setup candle right here. Closed on the other side of the profit line. 1 incremental below puts our entry right here, and this is going to be at 82.38 I should say. And then of course we got our target right here. In this case 18 cents below, as you'd expect, 82.20, just like the target, and get a really nice quick move down. This one took literally from 10:32. We were at target about 3 minutes later. $180 per contract. New long sets up here, as you know why. Close above the profit line, which is the profit line. Close above, very visual. When that happens, we got to make sure that we're in the buy zone right here, which we are on our OSOB. And then all it does is calculates 1 range above. So in this case, it's going to put it 6 cents above, and that's my entry price right here at 82.37. It does trigger. However, this one doesn't reach target. I am going to end up exiting the trade, as you can see here. Off of my early exit. I'm going to get out. I'm going to have a losing trade there, so I'm going to have a winner and then a loser. We come back with a short setup, close on the other side of the profit line, entry price right here. Now this one entered right on 82.10 was the calculated entry, and if you know our rules, it's a key level, so I'm going to adjust that one just a cent or two to 82.09 or even 82.08, probably safer. From that point, we can of course always try to move our target down the penny or two, or just keep it the same and just realize that the adjustment is sort of our insurance policy and a little bit of cost of doing business. Either way, if it's 81.92 or if I push it to 81.90, we obviously ended up with a full target. So we have that winner there. And then let's look for one more setup here. And we're going to get the close above the profit line, which we get not quite yet here, but should be coming. There it is, close above the profit line. Buy zone on the OSOB. Therefore, we go ahead and we put our entry at 82, in this case 11. And that trade should trigger. Let's see if it does. Comes back down, back up. And again, remember, no changes as we do this. Now, you see right here when we start getting all over the directional indicator, that would be a time that I actually would want to go ahead and push it just up a penny or two, because I don't want to buy right on the directional indicator. Okay, a lot of times markets can just literally hit that and reverse course. So it would have made sense, not here, but as this progressed and hadn't filled, when we started getting here and it got very crowded, to go ahead and bump my buy stop a penny or two. In that case, we end up triggering either way, and we end up getting the nice push and pulse to target and a full target at that. So 3 wins and a loss, really nice. after the crude report on Wednesday. Let's go to this morning session starting at 9 a.m. Eastern Standard. That's when you can start. You don't have to start at that time, but that's when we always say the session starts. So we got to set up a few minutes before, but you'll notice at 9 o'clock we were able to actually get in sync and get this trade here, 80.38 triggered and pretty basic to full target, right? Set up because you had the close below the profit line. The entry was nice, it was below the directional, and then we had the nice projected target. So we pick up a pretty quick win, great way to start the day. Second trade, you have to wait until you have a close, in this case above the profit line, which we do right here on this candle here. We have buy zone for sure right here. 6 cents above is going to be my entry. That's going to be at 82.48. Now that is one, again, thinking key levels. 82.50 is a big key level. I would definitely bump my entry to 82.51 or 82.52. And if you don't like giving up that extra 3 cents or 4 cents, push out your target. And then hopefully we'll get a move that'll push it out. I usually don't. I'm usually just going to take my adjustment. And if I make 15 cents instead of 18, I'm fine with it. We do end up triggering right here. Actually, no, we're not at 52 yet. So all this here, no trigger until we get moved. The good thing is, we don't keep changing the entry. We don't have to chase it. We just wait. Eventually, we do get a trigger. Trade starts to move up, and there's our full target on that trade. So that's our second win. Power of quitting. We really can be done at that point. It's only about 35 minutes in. That's a great way to be. Get on with your day and your life. We'll look at one more setup here just to take a peek for practice purposes. Close below the profit line right here. Calculator sees that just like you visually do. Sell zone, calculator, enters 82.39, decent entry point. Back and forth, even got an early exit here. The reason we have an early exit is we got into the buy zone on our OSOB, and that starts to calculate a potential to get out before the full stop, which is obviously quite a bit higher. That's great. That'll get us out here if we need to. Won't take a full loss on it. Ends up keeping us in the trade, weighs back down, and gets to full target. So this is a nice one because when triggers early, actually goes quite a long way. This is almost 30 minutes. And again, it's really reassuring when you have this strategy. Just stick with the parameters and stick with the strategy. Let this work itself out. A lot of people panic in this kind of situation who don't have a good strategy, and they end up chopping themselves up. We just hang in there. We had an early exit if things weren't going to go our way. Didn't trigger, and then patience took us to full target. All right, so good walk through the last couple days. This has been a great market in recent weeks. Crude oil futures, not for the really smallest accounts. You got to be capitalized properly because you're talking 10 cents, $10 per penny. So if I have a risk of, let's just say 20 cents, it's going to be $200. So you need to understand you don't want that to be some big percentage of your account. But for the right account size, for people who like very active, fast trading, this can be a very credible and effective market to trade. All right, so again, thanks for joining us. Be back with you soon.